Hello, good time. Looking at the numerous inquiries I have received in private messages, I have noticed many of them have touched on value added tax on imports, VAT on imports. So that will be the title of our topic today. Let's start with the normal import steps to make understanding today's topic easier. Importation of goods from outside the UAE into the UAE mainland is subject to VAT. When a VAT registered person imports goods, he may, subject to certain conditions, account for VAT in the tax return, rather than at time of importation of goods. However, when a person not registered for tax imports goods, VAT needs to be paid before the goods are released to the person. In general, how VAT on imported goods is handled. Instead of paying the VAT at the customs point, a VAT registered business in the UAE uses a mechanism known as a reverse charge mechanism to account for the VAT. The value of imported goods is declared in the box number 6 of the VAT return. This amount is then automatically factored into the total output tax liability. The same amount of tax is declared in the box number 10 of the VAT return, which is for supplies subject to reverse charge mechanism, and this entry effectively cancels out the tax liability declared in box number 6, allowing the business to reclaim the VAT. For a taxable person to be eligible for a refund of import VAT, the following conditions must be met. Firstly, VAT registration. The business must be registered for VAT with the Federal Tax Authority FTA. Secondly, the business use. The imported goods must be used for the purpose of making taxable supplies in the UAE. Thirdly, the business must have proper documentation, including a valid tax invoice or custom declarations to substantiate the claim. Now, I will illustrate in the following example. As it appears to us automatically in box number 6, for imports, there is a taxable amount of 26,509,000 with a VAT amount of 1,325,450, which we can put it in box number 10, and accordingly there will be no VAT obligation. Now, what about importing goods by agents on behalf of VAT registered persons? So, there will be situations where a VAT registered owner of the goods may request another VAT registered person or importing agent to import goods on behalf of the former. This will happen when the person importing goods is, for example, an agent for the owner of the goods, or in some cases, the customer of the owner of the goods. At the VAT, registered importing agent would have provided their TRN at the time of importation of the goods. The VAT amount would be automatically pre-populated in the box number 6 of the VAT return of the importing agent. This topic discusses the adjustments that should be made in the VAT returns of the importing agents on one hand and the owner of the goods on other hand. This topic also discusses who can recover the import VAT. As I will illustrate in the following example using the same numbers as the previous example, the VAT registered importing agent who acts as the importer of record would be required to make a negative adjustment in box number 7 of the VAT return in order to nullify the amount repopulated in box number 6 of the VAT return. At the same time, the VAT registered owner of the goods would be required to make a positive adjustment in box number 7 of the VAT return to include the value of goods imported on its behalf by the importing agent. The owner of goods would be entitled to recover the import VAT as per its normal VAT recovery position. It means placing it in box number 10. Therefore, there is no obligation to pay VAT. Important note about record keeping. The owner and the importing agent need to agree in writing to make the adjustments stated in the preceding paragraphs. Furthermore, both parties will need to retain the evidence of this writing agreement as records in addition to any other required records, including custom documentation. Alternative arrangement, where the owner and the importing agent do not wish to make the adjustments stated in the preceding paragraphs. The importing agent may issue a statement to the owner as prescribed in the article number 50, clause 7 of the executive regulations. The statement will be considered as a tax invoice for the purpose of recovering input tax by the owner and can be recovered via box number 9 of the VAT return. Please find the clause number 7 of Article 50 in Arabic and English, and then a practical example from the market. Here is an example of a tax sales invoice issued by the importing agent to the owner of goods. It has met all the requirements of Clause 7 of Article 50, indicating the amount of VAT paid that the owner of goods must pay. The customs declaration number must be stated to this document and must be compared with the VAT amount on the import declaration as shown in the figure. Then we can place the taxable amount and the VAT amount in box 9 in the owner of goods VAT return to recover what was actually paid for these imported goods. Please note the negative amount available in box 14 for refund. That concludes this video. Please feel free to ask any further inquiries. Thanks for watching. يعطيكم ألف عافية ودمتم بألف خير.